Hey guys, welcome back to The Market is Open. Check out our website, themarketisopen.com. So Tesla just reported their quarterly earnings after the bell today, and they earned $2.14 of adjusted earnings per share, well ahead of the $1.72 that analysts were expecting. Actually, it's kind of funny that there was a lot of talk on the conference call, and even Elon Musk was saying that retail analysts seem to know considerably more about Tesla than the actual analysts, which was actually proven by some of the analysts' questions, which we'll talk about later. So in this video, we'll have a look at what happened in Q4. We'll go over the update letter, the financials, and the conference call, and I'll summarize and give my own take on the highlights. It was a pretty good quarter, but I'm actually less excited about the past and more excited about what's coming in the near future, especially with all of the, frankly, crazy Model Y updates that Elon Musk and Tesla are preparing for. But first, hit the bell button to subscribe to our channel and be notified when we post future Tesla videos, and please smash the like button to help support this video. Okay, so Tesla stock is up enormously after hours. It's up 11.63% according to our website, and that's after a massive run-up. The stock even closed today at a new closing high of $580.99. So this has been a monstrous run. Just a couple of months ago in October, you could have bought Tesla stock in the $200 range. We made a video on this channel called "Will Tesla Hit $100 Billion Market Cap?" But in that video, we said that our conservative price target for Tesla was actually $654 per share, and it looks like after hours is just a few dollars away from that price target. That said, there have been many positive things happening at Tesla with the Model Y that makes me even more excited about the company. So in terms of financial highlights, let's look at the amount of cash. So Tesla has $6.3 billion of cash on the balance sheet. Actually, as I've said before, Tesla issued shares at $240 a share because investors were jumping up and down telling Tesla to raise cash. And at the time, I said it wasn't necessary because Tesla was cash flow positive, and so their cash was only going to increase from there. So we knew that at the time, and it did exactly that over the next couple quarters. So shareholders were diluted because Tesla actually caved to investors, and investors didn't really seem to know what they wanted. So here we are now with $6.3 billion of cash. It's a huge amount of money, but I think it's just going to sit there on the balance sheet because Tesla is still making positive free cash flow, and they're able to fund the business with the money that they have. And also, they can't buy back stock at these levels. I mean, they could, but it wouldn't make any sense to do that. Like, why sell at $240 and buy back at $600+? And then here we have some of the analysts still on the conference call asking Elon during the call, why not even raise even more money? So thank God Elon and Zach Kirkhorn, the CFO, were just like, no, we're not doing that. So Tesla added $930 million of cash this quarter, and they do have $1 billion of free cash flow. They also have pretty high operating income, which is pretty good. And actually their non-GAAP earnings were $2.14 per share, as I said. And in our earnings preview video, we said that Tesla would beat the $1.72 estimates, which they did. In terms of GAAP earnings, Tesla made $105 million, which is about 56 cents per share. So I think this quarter, they weren't helped by a wave of currency-related items that actually helped them in Q3, but I think this quarter it actually hurt them a little bit. So this quarter isn't as impressive as Q3, but it's still way ahead of analysts based on adjusted earnings. The difference between GAAP and non-GAAP is going to be stock-based compensation, and it's mainly going to be related to Elon's big payout, which is pretty funny because it affects earnings so much. But my take on that is that I don't really care how much they pay him. It's all in stock anyway, and as long as the stock goes up and he's making money for shareholders, so I think this is a good thing. And of course, he's probably going to use the money anyways on getting humanity to Mars, so I don't really care too much about how much he's getting paid. Okay, now in the update letter, Tesla showed the difference between the Model Y that they unveiled at their original unveiling and the production one. I think that the most amazing part about this is that there's actually a production one. So I think this is actually one of the biggest highlights of the quarter. The financials were good, but if you think about it, investors don't care about what happened in the past. They're only concerned about the future. And so I think the Model Y is really the highlight of this quarter, not the financials. And the reason for that is because they're starting to ramp up the Model Y pretty much 6 to 9 months ahead of schedule, let's say. It was supposed to be at the end of 2020 or fall of 2020, and then they changed it to summer of 2020, and now it's starting in January. So they expect to start delivering by the end of the quarter, which is pretty crazy. When was the last time Elon Musk or Tesla was early on something? So I think that they're fed up with people saying that they're late all the time. So I think they're going to be using their new learnings from the Fremont factory and the China factory, and they now know how to bring up factories faster than anyone else. It took about 11 months, they said, to start ramping up the Model Y, which is pretty insane, and 10 months in China to bring the factory from a swampland to a production facility. In terms of the Model Y, I think it's hard to see the real differences between the prototype on the left and the production one on the right because of the angle and the lighting. Actually, the front looks a little more slanted down on the production version. It doesn't stick out as much, which may make it more aerodynamic. Though Elon Musk has been fairly secretive about the Model Y, which I think is very important to surprise competitors. Also, speaking of which, they increased the range from 280 to 315 miles. No big deal. Actually, if that's not the highlight of the quarter, then I don't know what is. And I think it's pretty insane because the Model 3 is at 322 miles of range, and now the Model Y is at 315. So it's about the same as the Model 3, even though it's a bigger vehicle, and a 35-mile increase is huge for Tesla. And so Tesla put up this chart showing that they have 4.1 miles per kilowatt hour, whereas the closest competitor here, which seems to be the Jaguar I-Pace, which is selling completely terribly, is only at 2.7 miles per kilowatt hour. So I don't think that's appreciated enough that Tesla's efficiency is actually 50% more than the nearest competitor. And we haven't even mentioned the price or the functionality or anything like that. But why would anyone buy another car or a different car that takes a 35% hit on range? Like, it can only go 2/3 as far with the same battery size. So you'd be paying a whole lot of extra money for useless batteries in other vehicles as compared to the Model Y. So I think that the Model Y will sort of be the beginning of a finishing blow to some competitors. And the reason for that is that some automakers can actually see their sedan businesses not do well. Like, they don't care too much about their sedan businesses because the money is actually in larger vehicles like SUVs and trucks for many of these automaker competitors. And SUVs and trucks do seem to be the top selling type of or class of vehicle in the United States. So Tesla's now going to take that money away with an affordable SUV or crossover that everybody's been waiting for. Okay, so I'm sort of following the update letter here, so let's jump over to financials for a second. Here we have Q2, Q3, and Q4, and Q4 is highlighted, and then I've included my estimates from the last video for Q4. So Tesla outpaced my automotive sales estimates this quarter. They were slightly lighter on leasing, however, which I think is good. It's better that more money goes to direct sales rather than leasing. We were pretty close on the energy front. Batteries actually seem to be on fire, figuratively speaking. And I think that's thanks to the commercial mega pack that Tesla started to deliver in Q4. The solar division is growing, but it's coming off such a small base that I don't think it'll impact Tesla overall very much for the next couple quarters at least. We also said that we were keeping services the same as last quarter in Q3 because it seems to get eaten by all of the expenses. However, it looks like they had a $32 million increase in services revenue, while only a $7 million increase in the services expenses. So they did very well here. So total revenue was slightly ahead of our estimates. They earned $7.384 billion in total revenue. However, they also had a higher cost than what we said. Automotive and energy costs were slightly higher. In total, though, we were within about $80 million of gross profit. So in total, they had about 5.9 or almost $6 billion of total costs, which translated to $1.391 billion of total gross profit. So in terms of R&D, it looks like Tesla is hiring like crazy, maybe even for the energy generation side of the business, the solar roofs. They seem to be ramping up the solar glass roof, and they're going to need a lot of installers and people to pay for that, or that part of that might actually be in the SG&A section. And speaking of SG&A, Elon highlighted on the call that they made pretty much all of their money with no advertising. So that's pretty insane. They had $20 billion of vehicle revenue with no advertising. But in terms of sales, general, and admin, this account was a lot higher than what we estimated. We thought it would follow the trend and go down, but it actually went up quite a bit, maybe because of the end of year push, but that was sort of unexpected. So I hope Tesla brings that back down again. Okay, now I'm on the restructuring line. So somehow they have a negative restructuring charge, which is actually a positive. So we'll have to wait for the SEC filings to see what happened here. For other income, we said it would flip from being positive 85 million to negative 15 million. In fact, it was negative 25 million. So we were close. We got the direction right, and I think that was a good call. So in total, I think we were less concerned with the actual numbers, but rather the direction of those numbers and if they were going to beat the analyst estimates, which we said that they would, and they did. So they earned 58 cents per share of GAAP earnings, and that was after we took off the stock-based compensation. Again, it was $2.14 if you don't include that. I actually think that next quarter, Q1, will be dragged down by China. They said it did impact this quarter very little, almost negligibly. But I think now that China is going to start ramping up a little bit, a lot of those costs are going to end up in Q1. And there's also some seasonality that they talked about on the conference call that will impact Q1. So expect the next quarter to be low, positive, or even negative. But I don't care too much about that because the quarters after that, I think, will make up for that and then some. Okay, now switching back to the update letter, I want to go over some of their highlights. So their inventory was down to 11 days, which is crazy. They say it's the lowest it's been in 4 years, but you can see the trend from 19, 30, 18, 17, now down to 11. So that's pretty amazing. It helps them refresh their inventory, their storerooms, and things like that, and also get rid of old models and bring in new ones. Also, they don't have to pay a lot to keep all of this inventory or vehicles stored in random places. So it saves them money in the long term. Solar was up 26% since the quarter before. I think that's going to continue to ramp as it seems like the solar glass roof demand is very high. And again, installation is a constraint here. Battery storage was up 53 million or 11%, which is pretty amazing. Elon expects solar and battery to grow by about 50% this year. They also continue to boost the mobile fleet over physical locations. So the mobile fleet was actually up 81% since last year. So although everyone told Elon to backtrack on his statement saying that everything's going to be done online and that he was going to close all the stores, Elon is keeping the galleries open, but he doesn't seem to be adding too many more. Maybe a couple service centers were added. There was some small growth there. But the mobile fleet seemed to be where it's at. They seem to be doing very well, and Tesla's investing more in mobile. Also, we know that superchargers sell vehicles, so the more superchargers there are, if you're close to a supercharger and you're close to a service center, you're going to want to purchase a vehicle, and I think that's why the mobile fleet is doing so well, because they can sort of be anywhere they need to be. So superchargers were up 10% this year, keeping Tesla way ahead of competitors. Okay, this is my favorite chart, Q4 on the top and the last quarter, Q3 on the bottom, just to show a comparison. The numbers are almost the same, but let's look a little bit beyond that. So previously, Model Y was under construction. Now, in the next quarter, they're looking at 50,000 unit production capacity, aiming to be another 100,000 higher, or 500,000 in total, just from Fremont by the middle of the year. So that would be about 740,000 cars a run rate for the total run rate. So we estimated that the total vehicle deliveries would be 575,000 vehicles for the year. We estimated that a couple of videos ago. And so that's appearing to be very likely based on the capacity numbers that they've given here. Also, we know that Shanghai Model 3s are starting to roll out, but Model Y is now under construction in China. Tesla also says that they're going to need to expand the Model 3 capacity due to strong demand. So like, wait a minute, I thought that demand was going to flop in China because of the quote-unquote slowdown of the Chinese market, which is still like double the size of the US car market. Okay, so anyway, they're moving super fast, and to have done so much in one quarter is pretty crazy. Again, if you want to surprise competitors, all Tesla needs to do is just be early and beat them to market. The Mach-E concept car with unproven range and software problems and weird stuff going on the center screen isn't going to impress anybody who drives or whose friends are driving a Model Y. Also, Giga Berlin, the Berlin factory, is on track for 2021. No time wasted by Tesla. So this is Tesla's app store, consisting of 2 apps in total. Right now, one is worth $2,000 and the other one they're selling for $7,000. So I think that's pretty insane. I think they're slowly moving towards a more complete app store in the future. But I'm actually pretty impressed with the $2,000 acceleration boost. It's a software update, but when was the last time you got a software update for your iPhone, for example, that accelerated the speed of your phone? Like, I think that's crazy. The car can physically accelerate faster by unlocking this new hardware feature. I understand that it was there the whole time and they're just unlocking it with software, but still, think about it for a second. This is unheard of for a vehicle. Even for a mobile phone, it's not like you can just do a software update on your iPhone and get a faster GPU or something. Your car now accelerates faster, so that's insane. Okay, so finishing up with the update letter, this is Tesla's Model Y factory in Fremont starting to be built. They're building Model Ys here. This is the body shop, and Tesla expects over 500,000 vehicles in total delivered in 2020. As I said, they also expect solar to grow by 50% this year. Here's an example of a solar roof. I think that would be nice to be able to grow that much, though it's still under $1 billion a quarter for the entire energy division, but it'll still help revenue overall a little bit. A 50% increase in the solar division itself isn't saying much because it's off such a small base, but I'm hoping that's a lowball estimate given all of the technologies and advances that they're doing in the solar part of the business. It seems that with all of the demand for solar, they actually should be crushing it with solar, but they will need some time to improve the installation speed. So Model Y production will start in 2021 in Shanghai, which is good to give Model 3 some time to ramp up in China. But just take a look at the differences between the two factories. Shanghai is like a straight line. It goes to the right and then it comes back and then cars pop out of the factory. Fremont seems to be a complicated mess. So that alone will make Shanghai a lot more efficient. Elon says that in Fremont, it's like that because of some regulations. So it's too bad they can't just rip that out and make a brand new one that looks like the Shanghai one in Fremont. The one chart I wanted to look at was the vehicle deliveries chart by quarter. So you can see an S-curve over here that Elon's always been talking about. But I think that we're seeing the start of a second S-curve with the ramp up of the China factory and Model Y at the same time. Okay, so now let's switch over to what was mentioned in the conference call. So Elon has opening remarks about the Cybertruck. He says that Cybertruck demand is actually off the charts. Obviously, they're doing pre-orders still, but he says he's never seen anything like this before. They say that they're going to sell as many Cybertrucks as they can make for many years. Also, the product is actually better than people realize. He can't share any of the details yet, just like how Model 3 and Model Y are under wraps. And you'll only learn more later, probably when it's actually released. Even Model Y is still under wraps, even as it's entering production. So Tesla is secretive about their vehicles, which is good because they don't want to have competitors copy them, and also competitors have no idea what to expect when Tesla launches these new vehicles. So Elon's super proud of the Tesla team and also their product lineup and roadmap. They have the Model Y, the Semi, the solar glass roof, the Cybertruck, Giga Berlin is under works, battery technology that they haven't announced, but they'll probably tell us about on Battery Day. And I think the battery technology will be a key driving force behind many of these products. They also have full self-driving and the next-gen Roadster all on the roadmap. So he says it's hard to think of another company with more products than this and a better tech roadmap. And Elon is super excited about that. He says that they delivered 1,000 times more vehicles in 2020 than they did in 2010. So where do you think they'll be in 10 years from now? So the CFO, Zachary Kirkhorn, also had some opening remarks. He says that the Model 3s have shifted to organic demand from the reservation orders that Tesla was trying to keep up with. There's also been an increase in Model S and X prices due to the mix now that they have the new Raven models out. And also they're seeing a stabilization of the Model 3 price, especially since they were lowering the price for a while, but in 2020 it's supposed to stay around the same. Also, new production capacity is coming on board faster with even less cost. So Tesla's becoming more efficient with the capital that they're spending. Again, there was an $82 million stock-based compensation by the CEO grant. He says that the gross margins on Model Y are going to be higher than the Model 3, and they're going to be continuing to spend a lot of money on the Model Y factories to ramp those up. The CFO also expects the strongest annual financial performance yet for 2020, so I think that's very positive, and that alone could send the share price up, which it did. However, that said, Q1 has some seasonality issues, as we've seen in the past, and the ramping of Model 3 in Shanghai, Model Y in Fremont will weigh down the quarter because having new vehicle ramp-ups will actually cost more at the beginning until they reach a volume production. Also, because of the coronavirus, the government is requiring I believe it was 1 to 1.5 week factory shutdown in China. So that will probably affect their production there for a bit. And that might make Q1 a little bit worse than we think. Okay, so let's talk about the questions that retail investors had for Tesla. So the first one was about solar. Since solar is now needed for new homes in California by law, is Tesla seeing new demand for solar? So they say that the solar glass roof demand is actually very strong. They are still refining the installation process. They need to train a lot of crews, as we talked about. We also calculated in the last video that Tesla would need a ton of installers in order to install the the number of roofs that Tesla is talking about. Okay, the second question was about the car sharing Tesla network. Elon says that car sharing in advance of full self-driving actually makes some sense. Tesla, it is their intent to put Tesla vehicles into the ride-sharing network when it's ready. And this leads into a question on Tesla insurance, which is only available in California. Tesla is going to be expanding to other locations. They're preparing the processes to go through the regulators. Insurance is a highly regulated business, and they are going to continue adjusting the rates, but they do have more data and information than anybody else. I was actually thinking a lot about this. What happens if you're somebody who tailgates a lot, Tesla can detect that by using the radar system and some machine learning, see if there's a car in front of you and how fast you're driving and how close you are to them. And maybe not just even charge you more, but it could warn you and tell you you might be charged more because of this. You should adjust your behavior, and that will in turn lower your rate. So I think Tesla has a huge advantage here for lowering rates. And Elon was saying that rates are usually high because these insurance companies have no information and can't offer you any feedback about your driving. Also, they're talking about a discount for using autopilot. It seems that because autopilot leads to higher safety, they should give a discount right away. So that's highly correlated, and Tesla is going to start pushing that a little bit more. So Elon believes that Tesla insurance is going to be a major product over time. For example, if it's $400 a month to lease a Model 3, but $100 to $200 a month for insurance, that doesn't make a lot of sense. So Tesla's working hard to push this insurance business and to lower the price. And I think that's going to give a lot of insurance players a run for their money, at least starting in California. But over time, as they expand, this product could actually become pretty big. In terms of full self-driving, Tesla was supposed to be feature complete by the end of last year. Elon says that he had hoped that they would be, but they likely won't. It'll probably take another 6 months to be feature complete, meaning that there's some chance of getting from your home to work without any interventions at all. It doesn't mean it's working well, but that's the goal. Also, it was interesting to see the Open Pilot competitor by George Hotz, who has this add-on that you can put into your car that'll self-drive for you. However, it's easy, I think, to get to 95% of the way, but it's that last 5% that's extremely difficult. So it's amazing how far GeoHotz, or it's called Comma AI, how far that's come. However, it doesn't have the full cameras, the full 8 cameras around the vehicle, and they don't have nearly as many miles as Tesla does. However, they are expanding, and I think they're planning to make money off the data. Tesla's probably going to keep it for themselves and try to perfect self-driving. Elon does mention video training for labeling. So they believe that with all 8 cameras, they can do video labeling, which will be 3 orders of magnitude greater than the previous version of labeling. So 1,000 times better with video labeling. So I think that's going to be very important for helping full self-driving actually hit the market. Okay, in terms of institutional investor questions, there was a question about the Giga Shanghai factory. How is it that there's a cost reduction of 65%? So the CFO talks about the labor and the materials, localizing the supply chain. Obviously, all these things are going to contribute to lower costs. If you looked at the picture of the factory from earlier, the factory was way simpler in China than it is in the US, so that's going to help significantly. That said, though, the cost of the Standard Plus is lower in China than it is in the US, even though the costs are lower, so it's fair to expect the same margins as Tesla has in the US. However, having a factory on each continent is going to be a massive improvement in the efficiency and working capital of the company. Okay, the second question goes back to something we talked about a little bit earlier, which is why not raise capital now given that the share price is so high? Elon says that they're actually spending money as quickly as they can spend it, as long as it's sensible. He says that there's no artificial holdback, but Tesla does have enough money to fund itself currently. And you saw in the last quarter that they actually added a lot of cash. So although they're spending a little bit more, they're continuing to add cash. But if anything Elon sees has good value, he says the answer is yes. So they're spending more efficiently, but they're still generating positive cash. They generated $1 billion of positive cash flow in the quarter. There's also a third question about the operating expenses from Q3 to Q4, even including the stock-based compensation. The expenses seem to be higher. The reason for that is because of Model Y and Shanghai ramp-ups. But that said, Tesla has learned a lot, and again, they're unwinding some processes, including things like automating things which didn't need to be automated. So they're focusing on improving little things like that to find little cost improvements. And finally, from institutional investors, there's a question about why not get rid of the 18650 cells that Tesla's producing from Model S and X and switch to the 2170 cells? So Elon has said that the chemistry for those, the 18650 cells has improved over the years, and it's just simply a form factor basically right now. They're rapidly approaching 400-mile range for the Model S, which is using those older batteries. So it's not going to be long before they hit 400 miles, and you're seeing competitors that aren't even close to that. So Tesla doesn't have any plans to stop producing these battery cells, as they do seem to be quite efficient. Okay, now lastly, we're going to go over the questions that each analyst actually asked on the conference call. So the first one was Adam Jonas from Morgan Stanley, asks a question about Starlink. Does Starlink, do the satellites actually make sense to put onto Tesla. So Starlink is the constellation that SpaceX is actually putting into space, which is going to allow for internet access from anywhere in the world. I do believe you need a direct line of sight. However, you could put a satellite, which is the size of a medium pizza box, as Elon says, onto a vehicle and point it into the air to try to locate a satellite and get a connection from anywhere. However, that doesn't really work if you go into a garage or parking garage or anything that blocks your line of sight. And so Elon says that Starlink is really for high bandwidth, low latency, things like homes and businesses, aircrafts, even in boats. So there is no plan to put this on Tesla vehicles, though technically you can buy one and just stick it onto the car. However, 5G is going to make a lot more sense. So there's no point of this really. If you're in the countryside and you don't have a connection, then it might make more sense to put on a house there, I think. But it doesn't make sense to put it on your vehicle. That said, I don't know if Tesla realizes the demand for this network, because a lot of people hate their ISPs and want to leave their expensive ISPs for something a lot cheaper. So if this service will be cheaper, I'm sure people will switch to it. Actually, even if it's more expensive, people will probably switch to it anyway because they hate their ISPs so much. Okay, the second question is from Wolf Research. What is the CapEx this year? Of course, Elon's not going to talk about some of this stuff, but they are spending money as fast as they can spend it in sensible ways, he says. They're always trying to find ways to become more efficient all the time. He says that Tesla, or Wolf Research thinks that Tesla can grow at 30% per year. He says that's a giant number. How will Tesla be able to do it? And Zachary Kirkhorn says, actually, our plans are to grow a lot faster than that. Elon has said that he expects the company to grow at 50% per year, and he believes it's still on track to do that. Okay, the third question comes from Gene Munster, who's been very positive and right on about Tesla stock so far. He has a question about the Cybertruck. How many and what is the cost of production? Elon says the demand for Cybertruck is far more than they can make in 3 to 4 years. They're increasing the battery production capacity. That's of utmost importance. That's fundamental, because if you're just shifting batteries around, you're not actually putting more electric vehicles on the road. So they really need to put more batteries onto the road. The semis, for example, use a lot of cells, and that's why they're not producing any yet, because it doesn't make sense to take away, let's say, 3 Model Ys and create one semi. You're just shifting the batteries. You're not actually creating more electric vehicles on the road. Gene Munster also has a second question about a high passenger density vehicle, like a bus or something like that. Again, that goes back to the battery problem. They need more batteries to make these larger vehicles, which require more batteries. However, ARK Invest, which we've talked about a lot on the channel, they're an investment firm that are heavily invested in Tesla. They say that actually people seem to prefer to drive by themselves most of the time. So perhaps Tesla will look at a smaller vehicle for 1 or 2 people. Third question is from Evercore. What's the difference between the Model 3 and the Model Y? They're saying that there's just like a 10% difference between the vehicles, which doesn't seem to be the case. And the other question is that, like, will the Model 3 continue to expand with the Model Y? Because when the Model X was announced, the Model S had increased in sales, actually, which was kind of strange. So Elon says that Tesla is not really sure what's going to happen, but he's not worried about demand. He's worried about the production of these vehicles. Also, there isn't a 10% difference between the Model 3 and the Model Y. You really need to see the Model Y to know what all the differences are. And so I'm excited to see what those will be. Okay, the fifth question is going to be from Oppenheimer. They have a question about the powertrain. So Elon says the Tesla's still trying to make cars as fast as possible and still be profitable. There are price reductions in China. However, by doing that, they're going to make the vehicles more accessible in price, and they're going to continue lowering the price until it probably reaches a certain plateau or range. The key to make high volume and high margin is going to come from autonomy, because autonomy is pure software. It's going to be all margin. And autonomy is not actually that good in China right now as it is in the US, but over time that'll get better, and Tesla will fix that, and they're going to make more money because of that. In terms of the powertrain, Elon says that the current powertrain that Tesla makes is pretty damn good. The 100 kilowatt hour Model S is approaching 400 miles, whereas the competitor, the Taycan, which is double the price of the Model S, and the Model S is already an expensive vehicle. The Taycan is like $150,000, $180,000, $200,000 vehicle, has half the amount of range than the Model S. So again, Elon says that the Tesla powertrain is completely mind-blowing, and they're going to have hopefully Plaid by the end of the year, their new powertrain, which Elon says is basically alien technology, and it's going to be insane. And to me, I think that's something that I'm very excited about as well. The sixth question comes from Deutsche Bank. They have a question about China. They have a question about the affordability of the vehicle in China. So obviously the taxes and the tariffs and producing things locally and not having to transport things over the ocean is basically night and day in terms of affordability of vehicles in China. Okay, the 7th question is from Credit Suisse, again with the capital raise stuff. I don't understand why they keep asking this question. Why don't they raise capital to pay down debt? So my opinion is that actually Tesla doesn't need to pay down any debt. They have about $10 billion of debt. Their market cap is now over $100 billion. So it's less than 10% of the company's debt. That's actually a lot better than most other companies. At any time, they can raise $10 billion and pay it off, but they really don't need to do that. The debt can just sit there forever, and they can pay it off when the time comes, but they'll pay a small amount of interest to keep it up there. Actually, having debt on your balance sheet increases the value of the firm. So I think Tesla is actually doing just fine with the debt. They don't need to dilute shareholders in order to pay this off. Anyways, the 8th question is from New Street, from Pierre Ferrigu, who's he was actually pretty bullish on Tesla. Actually, he spoke very well about Tesla, I remember, in a couple of videos I saw from CNBC. So I think they were saying a lot of people have been making fun of Tesla for many years, but now the pros, the so-called pros, the other automakers, are having a lot of trouble producing vehicles. So how is it that Tesla is able to produce batteries while competitors can't? And well, the reason is that Tesla actually has 10 years of battery production expertise ahead of all of these other competitors who have been ignoring Tesla or laughing at Tesla or trying to ignore Tesla this entire time. So Tesla is expected to see production growth in Nevada. Tesla is very vertically integrated. They have the cell and the module and the pack are all produced by Tesla. A lot of competitors are actually sort of outsourcing pieces of this, and they don't really seem to have a strategy around how they're doing this, and that really lowers the efficiency because you need to get all the parts of the battery to work together, even with the powertrain and the rest of the vehicle, in order to be efficient, and only Tesla seems to be doing that. Tesla also says that they're working well with Panasonic. Panasonic has been a great partner for many years, and Tesla has added additional partners, including LG Chem and CATL, C-A-T-L, which are smaller. However, they're going to be contributing to batteries. Tesla will likely have a battery day in April. They're going to wait because they say that they're super deep on cell module battery production. They do have a lot of experience integrating the batteries into the cell, and they're going to talk about that on Battery Investor Day. However, I believe this quarter or the next quarter is going to be a tough quarter, and they're all going to be busy working on new stuff. So the Battery Investor Day probably won't be until later, probably past April. And finally, along those lines, there's a question by Joseph Asha, who asks about the Maxwell acquisition. Obviously, Elon's not going to talk about this, but he asks about is the capacitor side of the business or the dry cell, are those both going to be used? Are they going to be using supercapacitors in the vehicles? So this guy obviously hasn't been paying attention to YouTube or to anything really. So Elon has already sort of answered this question. He says that the capacitors aren't really that important. However, the dry cell technology that Maxwell has is going to be huge for the company, along with a couple of other things. So it's kind of funny because Joseph Asha says, I'll have to read the blogs more. But I'm not sure if all the information is coming from the blogs. It seems to be if you just watch all of our YouTube channels, you get quite a bit of information. Anyways, I hope you guys enjoyed this video. Please hit the bell button to subscribe to our channel and be notified when we post future Tesla videos. And please smash the like button to help support this video. Thank you guys so much for watching.